Many companies actually pay their dividends on a yearly or half-yearly basis, but I wanted to find the best quarterly dividend-paying companies for you. And in my research, I've actually found that there are actually some companies that used to pay quarterly, but now have changed the way, such as Mapletree, North Asia Commercial Trust. But today, I've still created 10 special names for you, and these 10 are going to be very useful, especially if you are planning about retirement, because retirement, you need consistent cash flow, correct? And if it comes quarterly, it's going to help you easier on your expenses. Or if you are aiming for financial independence, retire early, FIRE, then you will definitely benefit from having these quarterly dividends. And today, these 10 names, I've ranked them from the least preferred all the way to the most preferred, which is number 1. So stay tuned to the end. Hi guys, welcome back. Without further ado, let's dive on to number 10, who is SGX. Many people mistake SGX as only doing equity listing, but it's not true. SGX also has fixed income. SGX also makes money from derivatives. And the main part about SGX is it has been always a very steady dividend player. Let me show you the price chart first. You realize that it's been doing pretty well, correct, since COVID-19. And right now, the dividend yield is about 3.3%. But the interesting part about why many retirees have actually used SGX in part of their portfolios is because they've been paying dividends consistently. I'll box out for you the bottom right hand side. You realize that they have been paying these dividends for about 30 cents since 5 years ago. The biggest risk for SGX in my opinion is competition from other bourses such as listing in New York, such as listing in Hong Kong. There are many reports that suggested that SGX is no longer very popular even with local brands such as Grab, such as Sea Limited. And SGX has also mentioned that they are entertaining the idea of allowing SPACs to be listed in Singapore. So hopefully they can change the tide, and let's move on to number 9 on today's list. Number 9 is something very different from SGX. This company is UMS Holdings. UMS is actually in the semi-con industry, and if you look at the share price over here, you realize that it's done fantastic, correct? Since the crash of March 2020, it's probably done a 2.5x. Right now, UMS is giving a dividend yield of about 2.5%. Simply because it's a favorable wave for semiconductor companies right now. The dividend yield for UMS currently is 2.5%, and I do believe they have the capacity to increase this dividend, especially when they are looking at increased profits, at least in the coming quarters ahead. The biggest risk for UMS is obviously it's cyclical in terms of its industry, which means semiconductors right now, there's an over-demand of it. But in some point in future, there could be an oversupply, which means prices could fall. So when you buy a cyclical stock, it's important for you to keep tabs on the industry movement. You should also know that UMS actually sells majority of its products to one particular company, and this company is Applied Materials. About 80 or 90% of its total revenues is attributed to one big customer. So while the relationship has been very good for many years, there is always this risk that if this one customer is not doing well or decides to change the relationship, naturally you impact UMS's revenue. So when you invest, make sure you are very familiar with the risk also. Number 8 on today's list is actually a REIT, ESR Reit. Right now, ESR Reit is seeking to merge with ARA Logos Logistics Trust. Now, ESR was previously Cambridge Industrial Trust, and in 2018, they've actually acquired VIVA Industrial Trust, which expanded their portfolio. And actually in 2020, they seek to buy out Sabana Reit also, but that deal was voted down. So ESR Reit looks to be acquiring assets and building up because in the REIT space, size does matter. It lowers your borrowing costs. So hopefully this merger with ARA Logos Logistics Trust can come to fruition, and with that in totality, they become a stronger brand together. Share price for ESR Reit has been relatively flat over the last 1-2 years, but it's been providing a 5.5% dividend yield. Number 7 on today's list is Suntec Reit, something I've covered extensively on this channel itself. If you look, Suntec's Reit performance has also been relatively flat, simply because they have a convention center, and with social distancing, it's not likely that there's going to be any baby fair or any car fair anytime soon. Suntec Reit is focused on offices, and recently they made acquisitions in Australia as well as in UK. If you're keen to find out more, I've actually done a previous full tutorial. Check out the links also below. And the key part is investing in Suntec Reit gets you about 4.8% per annum in terms of dividend yield right now. Number 6 on today's list is also a REIT, but its operations are not in Singapore. Its operations are fully in Tier 2 cities in China. This REIT is SASSEUR Reit. If you look over here, you realize that SASSEUR Reit has malls in Chongqing, Hefei, and Kunming. These are Tier 2 cities that we normally don't travel to as a tourist. The simple concept is in China, there is a lot of counterfeit items, correct? And having premium outlets actually kind of solve that problem because when consumers buy there, they can trust that they are buying the real material itself. Sure, you should expect the biggest brands such as Armani to have an outlet over there. SASSEUR Reit has been delivering well in terms of its performance operationally, and right now they're paying a dividend yield of about 7.5%. If it were not concentrated only in China itself, I believe it would have ranked higher on this list. But so far so good on this REIT, and if you're keen, I've also done a full tutorial before, check out the links below. Before we get to number 5 on today's list, let me invite you to leave your questions, if you have, in the comments sections below and smash on the like button. Number 5 on today's list is actually Mapletree Logistics Trust. A very well-known trust in Singapore, one of the bigger ones, but I haven't covered them surprisingly on this channel. So what I can share with you is they have actually made a recent acquisition, which is in Yeoju, Korea. That deal is worth $153 million and it further diversifies its assets. If you look at this 5-year price chart, you realize that Mapletree Logistics Trust is one of the top performers across all REITs, and simply because logistics is a very stable segment right now in the new economy. The dividend yield for this REIT is 4%. Enough of REITs already. Number 4 on today's list is a company I'm very familiar with. Most of my clients have actually investments in their platform. This company is none other than iFAST Corporation. iFAST has seen their share price skyrocket over the last 2 years. If you haven't seen it, let me pull up the chart for you to see. Mind-blowing, correct? They've done a 10x in terms of share price. So fantastic job. Right now, the market cap is more than $2.7 billion already. iFAST is more of a growth company. So in terms of dividend yield, you realize that it's a puny 0.4%. But that's also partly because share price has gone up way faster than the dividend growth. If you look, they have declared that they are keen to increase the dividend payout in the coming quarters ahead. iFAST is also bidding for a Malaysia digital bank. As of this time of filming, the results are not out yet. And I've also done a full breakdown of that topic itself. So if you're keen, look for the links below. One of the key reasons I placed iFAST so high on this list is because I enjoy hearing the ambition that CEO has to share. He intends to grow iFAST into a 100 billion AUM company. Not an easy feat, especially right now it's only 18 billion. But everything starts with the CEO. That's why I believe if you have a visionary like Elon Musk or Jeff Bezos, naturally it drives the company to grow way faster than expectation. And so far, this company has really been pushing on all frontiers. iFAST has also won something in Hong Kong, which could further expand its ability to bring in asset under management. And with that brings in recurring income. And while everything sounds good, the reason is at number 4 on today's list is because the valuation could also be rich already. If it comes down slightly, perhaps this could be a very interesting company that you should add to your watch list. Number 3 on today's list is possibly the best performing REIT in terms of share price over the last 2 years. Take a guess. It's quite obvious, correct? It is none other than Parkway Life REIT. Parkway Life REIT is in healthcare segment, and they actually give master leases such as that arranged with IHH, who is also their sponsor. And through this master lease, they have been consistently growing their dividends per unit, which means you only just need to hold on to it and continue to enjoy increased dividends. Now, you definitely know some of the hospitals they own, which include Mount Maui Novena. And the only reason why I have it at number 3 on today's list is because it's fairly concentrated on one sector. And while the master lease right now is arranged past 2040, I do believe that sector risk is also important to take note, but this is a fantastic REIT to own. Number 2 on today's list is one of my favorite REITs, Mapletree Industrial Trust. Now, this REIT has actually moved from industrial properties all the way now to data centers. That is a very forward-thinking way of diversifying their assets. Now, they also have a very strong sponsor, which is Mapletree, and Mapletree has helped them increase their data center allocation consistently over the last few years. Right now, 40% of all assets are already in data centers. If you look at the price chart over here, realize that it came down slightly over the last few months, correct? And in my opinion, valuations are no longer that expensive. They have also been consistently growing their dividends per unit, as you can see in this chart over here. So right now at this price, Mapletree Industrial Trust pays about 4.1% in terms of dividend yield. And they'll be releasing their new quarterly results soon. So if you're keen to find out, smash or subscribe and stay tuned on this channel. Now, we've came far together covering companies who are in semiconductors, all the way to financials and all the way into REITs. And today, the number 1 that I have for you is something that I see in many of my private clients' portfolios. This company is somebody that you very likely bank with. It is none other than DBS. DBS, as of 2019, has actually changed to pay quarterly dividends to their shareholders. And to me, that's very friendly. That helps shareholders get a more consistent dividend income. And for example, competitor UOB, they pay 60 cents per half yearly. To me, that is pretty lumpy. Why not also break it down to quarterly? It's still a sizable amount. So in my opinion, if UOB also changes to quarterly dividends, there should certainly be a lot more peer pressure for OCBC to also convert to a quarterly dividend payout. The key part about DBS is they've been growing their dividends consistently. In terms of share price, DBS has been the best performing of the three. And if you look at this chart over here, you realize that it's at its all-time high. Now actually a question came up from a previous interview I've done, which is, can I see DBS doing a 3x in the future itself? My answer then is very unlikely because banks are not growing that quickly also, although they are very stable and very protected. But 3x can also be achieved through capital gains as well as dividends. If DBS is able to grow its dividends, naturally there's a good chance that in the next 10 years or 15 years, it is not impossible for them to deliver 3 times your investment capital. So as of this chart, you realize that DBS's dividend yield is 2.5%. But that's actually not reflective of the real situation because in 2020, MAS actually had a dividend cap for all banks to ensure that they conserve enough capital. So that cap has been lifted already, and projecting forward, DBS will pay at least 4% in terms of dividend yield. If you want to find out more on banks, I've actually a full tutorial done previously on the 3 banks. What is the outlook? What is the dividend growth rate? And if you want that answer, check out this tutorial. This has some of the latest news and it will help you understand, especially if you're already an investor in more of these banks. So with that, I'll sign off and see you in the tutorial. So take care and goodbye.